Welcome, homeowners. John Thorman here, and I'm excited to talk to you today about mortgage protection insurance. Now, there's a lot of misinformation and confusion out there surrounding this subject, so I want to clarify it for you right now. So let's jump in, okay? When you purchase a home and have a mortgage, that is a major life event that triggers the need to review your life insurance policies. You want to make sure that you and your loved ones are properly protected, okay? Now, let's face it. If it takes two incomes to pay all the bills in your household right now, so I mean, you and your income and your spouse or partner and their income, if you need both of those incomes to pay all the bills, how are you going to survive if one of you becomes terminally ill, chronically ill, or critically ill or injured, or God forbid, one of you dies prematurely? With one income gone, the surviving family members or the healthy family members are going to face a huge financial crisis. And that's what we want to avoid. The solution is to get what we call a new style of life insurance policy. This is very different from what you are probably thinking about when I say the word life insurance, okay? This is not your grandfather's life insurance policy, because the old style, right, of life insurance policies only pay out when somebody dies. Well, the new style of life insurance policies include what we call living benefit riders. So that makes money available when or if you become terminally ill, chronically ill, or critically ill or injured. You can access those benefits and get cash now to pay all the bills and take care of your health situation and try to get better. So the answer is to get a new style of life insurance policy, because they have these living benefits and will make more money available to you. Now, recent stats have come out and they show that only 54% of adult Americans own any kind of life insurance, okay? And this number has been declining for the last 2 years. It's just been going down. I think the number I saw at a peak, it was like 77% of adult Americans had life insurance, and it's now down to 54. So the last 2 decades, it's just been going down and down. So if we dig into those numbers some more, though, what we find out is that only 40% of adult Americans own an individual life insurance policy, and that's really what you want. You do not want to be dependent upon a group life insurance policy, because typically they're not portable. So when you lose your job or you leave and go on to another job, you lose that insurance protection, and you don't want that to happen. You want to have an individual policy. You want to own and control your own policy so it goes with you wherever you go. So what those stats tell us is that a mortgage protection insurance policy could be your very first or only life insurance policy that you own. So we want to make sure that you get the right information here and make a good choice and avoid a costly mistake, okay? So first up, before you close on a purchase of a home or a mortgage, the mortgage lender may offer you something to pay off the balance of the mortgage in the event of your premature death. This is better known as credit life insurance. And credit life insurance, my feeling is that those policies should be avoided, okay? And I got 3 reasons why, and here they come. You ready? Number one, they're expensive, okay? Credit life insurance is really like a group policy. It's a guaranteed issue situation where you don't have to qualify medically at all. There's no underwriting. So you buy the policy. Well, because of that increased risk to the insurance company, they have to charge you more money for it, right? They have to offset the risk by raising the premiums. So those policies are expensive. And if you're reasonably healthy, you don't want to go that route. So second reason why is that the beneficiary is the bank. It's the mortgage company. It's not your family. So you're not buying benefits that are going to go to your family. You're paying for the bank to get paid off, okay? And you don't have any control over that. And third reason why I would recommend avoiding it is, what is it? Oh, here it is. Yeah, you're paying for decreasing term insurance. Okay, so the insurance amount or the benefit is decreasing every year in step with the decreasing mortgage balance. So as you're paying your mortgage off, then the insurance benefit is declining with it. So this is not the best deal. Okay, if you're looking to protect your family, you can do better than credit life insurance, so I'd avoid it. Now, here's the exception, okay? Unless your health is so poor that you will not qualify for an individual insurance policy, then you can get credit life. But that's not going to be for most of you. Most of you are going to be reasonably healthy. You're going to be good enough to qualify for an individual policy, and that's really the way you should go, okay? The next concern or the next area of confusion is private mortgage insurance, or PMI. This is something totally different, okay? If you buy the home or you're refinancing and you don't have at least 20% down payment, okay, the lender requires that you purchase PMI, private mortgage insurance. And this is not a benefit for you or your family, but it's the only way you can get the loan. The PMI just protects the lender in the event that you default on paying the mortgage. Yeah. So it's not going to protect you or your family at all, but you have to get it if you want the mortgage. So we still got to get you coverage, right? So the last thing, what we're talking about now to protect you and your family, is mortgage protection insurance. Now, when you purchase the home or refinance, what will happen is you'll get letters in the mail. You'll see letters like this. Actually, you'll probably get several, maybe half a dozen, okay, letters talking about mortgage protection insurance. And what it says is that there's a state-regulated mortgage protection plan available to you, and this protection will take care of you and your loved ones who are relying on your ability to earn income and make the mortgage payment. Makes sense, right? So in the event that you or your spouse become terminally ill, chronically ill, or critically ill or injured, or die, if that happens, okay, money's there with mortgage protection insurance so that you can take care of the bills and pay the mortgage and stay in the home and protect your family. Now, this mortgage protection insurance is ideally, okay, a level term insurance product. So that means that the amount of insurance stays the same for the length of the term. And the term can be 30 years, just like your mortgage. And so as you're paying down the mortgage, then more and more insurance monies are becoming available because the insurance benefit amount stays level, okay? And the other good thing about this product is that your premium is guaranteed for the length of the term. Premium is the amount you have to pay. So every month you make a payment on your level term life insurance policy, and you've got the guaranteed coverage. And that, like I said, that cost for that will not change during that guaranteed term. So this new style of life insurance, this new style of level term life insurance, gives you superior protection and peace of mind and financial security. Okay? You've got the level coverage, you've got a guaranteed premium amount, and if something happens, you can access money while you're still alive. Now, the other thing to notice about this is that these new style of life insurance policies are simple and fast and easy to apply. Okay? The good news is that there are no invasive medical exams required. Okay? This is good, right? So a nurse is not going to show up at your house. She is not going to be there with a needle. She's not going to draw blood. There's no urine samples required. None of that mess, okay? This is easy and simple, and they get issued quickly. Typically, these policies are issued in a matter of hours or days and not weeks or months. So this is a huge advantage to these policies. What happens is a field underwriter will talk to you and ask you medical questions, and submit the application for the insurance company, and who then reviews your answers and will compare it to some other data sources like a medical information bureau. And if things look good and they determine that you're a good risk, they will then issue that policy for you. Okay? So my suggestion is that homeowners with a mortgage get a level term insurance product, or mortgage protection insurance is what we really call it. Okay? And get the length of term for as long as possible, up to 30 years. But you got to be careful. Okay? I have seen mortgage lenders presenting their credit life insurance as mortgage protection insurance, and it isn't. And I've seen other well-meaning people trying to explain this on YouTube even, and they're getting the terms all mixed up, and they're calling credit life mortgage protection insurance and telling you not to get it, and it's like it's a disaster. If you own a home and have a mortgage, look at mortgage protection insurance, which is a level term insurance product. Okay, get the new style with the living benefits so that you are properly protected. Let's see. So to help you with that, I would also suggest that you talk to a licensed professional who is an independent insurance agent. They're able to shop the marketplace for you and find the best policy that will meet your needs, right? They cover the amount of the mortgage, meet your needs based on your health condition and your budget, right? So talk to an independent, an agent, to get the best coverage there. And then in closing, consider this, okay? If you don't take care of this now, when something happens, and it will, who's going to pay for you and your family? Who's going to cover the mortgage, the groceries, the doctor bills? How's that going to happen? If you experience this financial hardship, you don't want to compound it and make it worse by forcing your family to set up a GoFundMe campaign, right? Or spaghetti dinners to try to raise money to help you and pay your bills. This is a simple process. You can get the coverage you need to protect your family and prevent, this kind of a situation. So the peace of mind that you'll receive is priceless. Okay. So if you have any questions, please, that's what I am here for. Drop some comments, reach out to me. You can check out the description box. I've got a link there to our online calendar. You can book a time to talk with me. You can call our office number and leave a message, and we'll get right back to you. We're happy to discuss this with you and find the right solution that'll meet your needs and fit your budget. And remember, if you won't fight for your financial freedom, who will? Good question, right? Subscribe to this channel. Be part of our journey here. We are a bunch of financial freedom fighters. All right. We want to obtain financial freedom for ourselves, our families, and our clients. And that could be you. So I hope you'll join us for the journey and explore these different financial options and the mindset and how we go about relating with money and personal finances. There's a lot to cover here. It'll be a fun ride, and I look forward to working with you and talking to you on the next video. So subscribe and then hit the bell so you don't miss it. All right? Thanks. Have a great day.